Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss. It is June 1st. Happy June. And let's get started with the charts. So we're tracking still the 3.5 coupon. We're at 103.09 this morning. So trading is up a little bit. We're at about a 103 support. So we're just a tad above our support. And the next support is probably going to be about 102.80. Resistance is coming up above us at about 103.20. You can see we briefly broke through this here last week, but we did not hold. We did not hold, but this is a good sign. We are on an upward trading channel, but it appears that at least over the last few trading sessions, we are probably going to flatten out. So here's the scoop. The ISM and the ADP came out today. Actually exceeded expectations. Good for them. Good for the economy. Not so great for bonds. But we also had construction spending really kind of miss the mark. Same goes for jobless claims, interestingly enough. And so that's kind of the mixed bag of news. The productivity hit expectations, so that really wasn't a big mover. So here's the thing, though. Not a lot of news coming out. You know, there's still a lot of stuff coming out regarding some of the investigations on the White House. You know, I would keep an eye on that. That is going to potentially impact markets if there's any major news that does come out on that. To kind of quantify where we're at, last month, Freddie Mac reported the average rate was 4.05%, and the average consumer paid a half a point to get that rate. So I say last month, but I'm sorry, I'm talking April, not May. May hasn't been released yet. So by the time I do my next video, we should have May in here. Nonetheless, we're about 29 cents better than where we were in April. And so if the average consumer is paying about a half a point, if we're 29 cents better, the average consumer may be paying, somewhere around a quarter of a point for something similar. So anyway, that's kind of where we're at in comparison. Next video I release, we should be able to have the May averages out for you. Okay, so here's where we're at. Last projection I hit. Bam! That's 2 in a row. Here's the analyst outlook. It's pretty neutral. For both short-term and long-term. They really aren't too bullish or bearish on the market. So I'm going to project, I'm going to go a little bit wider. And you know what's so funny? If you go back to last week's video, this is going to be the same projections as last week, which was really kind of, I'm in line with the analysts. I do think that the market's going to flatten off unless we see any major news that impacts our economy. So if we do trade within my range, we could see a fee swing as much as maybe 11 cents or to the good, or 29 cents to the worst. So I don't think we're going to see anything major over the next week, honestly, and we may have kind of hit the roof. So if we fall lower or open low tomorrow, that's really what's going to solidify a neutral trading range and break us out of this upward trading channel. So what I would say is, if you can float, I think you're going to be okay and pretty safe doing that unless you hear crazy good news about the economy. So if you're tight and you're going to be closing your escrow soon, you may consider locking. We are toward the top of the trading channel, and if we do break down, we could lose maybe 20 cents. So I think that's a safe thing to do. Okay, that's it for now, guys. I'd love to hear from you. Leave your comments down below. Hit that like button before you go, and if you're not subscribed yet, click the ugly guy on the left. That will get you subscribed to the channel. Just a quick alert saying when we release updates on the bond market. And if none of this made sense to you, top right, Mortgage Bonds 101, that'll teach you the basics that you need to know as a consumer when trying to figure out when to lock in your rate. Anyway, that's it for now, guys. We'll see you next week. Have a good one. Bye-bye.